Hello, and thank you for tuning into the Art of SBA Lending. Today on the podcast, we have Amber Dorland, Head of SBA at FFB. Amber is an SBA veteran based in San Diego. She is a NAGL instructor. She's been a closer, an underwriter, a credit director, and now she's head of SBA at her bank. And she's extremely knowledgeable when it comes to SBA. We get in the weeds on a few really interesting topics like just what her day looks like as a director, overseeing sales, credit, operations, servicing, what it's like managing and hiring in a remote workplace setting, and of course, SBA underwriting. So if you like, the art and science that goes into underwriting a deal, you're going to love this episode. So stick around. All right. Well, Amber, thank you for joining the podcast today.
Thank you. It's good to be here.
Okay. So I wanted to give you a chance to just give us your background, your story, if you don't mind.
No, I appreciate that. So yeah, I've been in SBA and dabbled in some commercial lending for 21 years. I don't know, counting. I've grown up through all the various jobs. I've done closing and underwriting and kind of slipped into management. And now later in my career, I'm managing all things SBA. So I have not only videos and sales underneath me, as well as the back office staff of closers and underwriters, but also the SBA servicing pieces. So, managing that portfolio for the life really that it exists. So, that's the quick and easy of it, but it's been a long time in SBA and I love SBA, so it's been a great niche for me to continue in, and I love to just help all those small businesses.
Everyone loves SBA who's in SBA, right? We're very lucky, and I could connect with someone like you from across the country, and I just feel this connection to you because you know what I deal with on a daily basis, and it just kind of unites us, I feel like.
We're definitely all going through the same things, right? So yeah, there's definitely a connection because of SBA.
Would you say the bulk of your kind of experience in SBA was on the credit side?
I'd say heavily into credit. I mean, I loved when I first got into SBA, and getting into a closing position was great, but I very quickly wanted, to have a different aspect of it. So I think credit is where my heart is, and I love that piece of it. I think that's, one of my niches and where I'm able to help my team a lot in that underwriting space and teach for NAGL in that space, so that's very easy for me. I'd say I probably dabbled in the credit side of it longer than the other pieces.
Well, how do you teach it? Because I feel like SBA underwriting is kind of unique. There is the numbers and the financial analysis side to it, but then there's also kind of like the story. And how do you even teach SBA underwriting? Like, what is SBA underwriting? Like, how do you teach it?
That's a great question. It's got its own ins and outs, and it's a really long learning curve because you have to know the SOP, and you also have to know your lending institution's policy. They're both very intertwined in how we look at SOP and how we manage through a loan. So it's important to really understand both. So there's really two layers to it. And, I think with time comes a lot of confidence after you've really seen a lot of different deals and how you navigate through that. But in the beginning, it's hard to teach. It's a lot of, the pieces of this puzzle will come together at some point as you just start putting them in there. But you got to start with basics like financial analysis. How do you look at financials? How do you look for trends? How do you ask the right questions to your customer? Creating the right amount of curiosity to talk to your customer about and understand their business. And I think when underwriters are successful in that and they get on the phone with the customer, it just lends to a great relationship at, it's the beginning of many things usually with that customer. So it starts with that. But the SOP goes much more in depth, as you know, and so there's a lot of things, eligibility, and different components that you have to understand based on your use of proceeds, or based on your collateral, or even based upon, what type of program or delivery method that you're using for SBA. So it depends on so many different factors, and that's why there's a long learning curve.
Like we say on the podcast, it's art and science, right? That kind of is SBA underwriting. It's part art, part science. Now, do you think, because underwriting and like the traditional underwriting of 5 C's of credit, for example, it's been around, I guess, like forever. Do you think that's still an effective way to underwrite? Is that just how it is, and that's how it's going to be? I just feel like with innovation and different ways to do things and technology and data, for some reason, the basis still seems to be the same.
Yeah, I would say that the 5 C's are still, at the heart of it. You want to have prudent lending, right? And you want to be able to, have those 5 C's. And in fact, when we teach basic credit at NACLE, I go through the 5 C's. And so it's still very much the heart of, what being prudent as a lender means. And I know we're not yet fully understanding some of the changes that have come out, but a lot of that is reflective of do what you do, right, and be a prudent lender. And so that's where those 5 C's, you come back to those basics, are all those things working in sync for the loan, and do you have a good borrower, do you have a good loan?
What about, like, I want to talk about character, and I want to talk about grit of a small business owner, because isn't so much of it like character, like when times get tough, what do they do? And grit, like when times get tough, what do they do? Basically the same thing. I feel like that is an important part of it that we don't focus that much on when we underwrite an SBA loan.
I've said a lot over the years, it's not rocket science, right? And we make reasons why experience is related and all those things, but character and understanding, ability and grit, like you're saying, that true desire to really grow and be successful at the business, that's really, really important. I think even more so now than it was in the past, coming out of these economic times that we've had, and rates are up, all those things, talking about recession later this year, things like that. I mean, having good character is a foundation for having a great relationship with your customer. And, we always say cash flow is king, because it is, and cash flow needs to be there. But for me personally, so is character. And if that character is not there, usually there are some other red flags as well. But it's really important that a business or an owner portray good character. That ability to pivot, the ability to grow in a different area, to figure out where the need is, to find the right resources. Those are things sometimes you can't really teach, and you hope that your small business owner has all of those characters, and it's important that they do. So I'd say it's important now more than ever.
It's really tough because, like, where do you draw the line? Because the thing is, I deal with folks all around the country, a lot of people buying businesses, and all the data's out there, and people understand the rules now, and people try to, get around the rules sometimes. I mean, people come to me asking, do I have to PG? I'm almost to the point where if you ask me, I don't even want to do the loan. Or how do I avoid a PG? I'm like, really? Like, are those reasons to decline a loan enough? Because if that type of loan does get in that situation, and that's kind of where their head's at, of like, how do I get out of this with the least amount of risk? That's more than just the character of like having bad personal credit or bankruptcy or criminal charges. It's kind of like little things you pick up on throughout the process, just in your interactions with them. Like, how do you deal with that?
Well, yeah, and then to that point, right, after you fund the loan, it's not over. There's a lot more life. You got to deal with that customer. You got to work with them, potentially on a monthly basis. And so you want to set up that good relationship. Yeah, you hope that that customer is going to give you back that relationship that you're giving to them, because that is really important. You don't want to be chasing them down the road for payments and things like that. But I think, when you're originating a loan and you come across those gray areas, those are really difficult. And usually I'll say, in my experience, when there's a loan with that sort of level of gray area, it's not just one gray flag, if you want to call it. There's multiple gray flags there, right? There's multiple things that you probably picked up on. But, you try to give your borrower the benefit of the doubt. And at the end of the day, you hope that you're not painting a picture, but sometimes that picture's there. And getting your customer on the phone and really truly understanding intent and some of those things, you just got to figure out. It can be difficult. Again, you kind of reach that gray area, and I hear you, right? When you can't undo something, and so, it's tough. You don't really want borrowers that are trying to get around rules. You understand at times that they want to play within the rules, but sometimes the approach makes it seem the opposite, right?
Yeah. I mean, it is a lot of gray. Like, one example that comes into my mind is when a borrower puts no on the 1919 for bankruptcy, and then you pull it and they had a bankruptcy 22 years ago. It's like, did you lie on a form? Or did you not realize you did that 22 years ago? Or did you think it said in the last 10 years and that it just fell off and no one was ever going to know about it?
Right.
Is there an answer for that?
That's always tough. You want to, again, believe what your customer says. I think, when they come forward and they're like, these are the struggles that I have. I've had these things in my past. I have a lot more respect for that customer that told me they had a BK 20 years ago. They might not be ever expecting that to show up in our public record search, but, if they disclose that, I can work with that. It's the things you uncover when you, start turning over rocks and you're like, whoa. And then again, you're building this, puzzle, and then all of a sudden you just have too many flags that you're like, why are these things like that? So, yeah, it's tough, and there's a lot of rules. And so, again, I try to give a borrower a benefit of doubt that they're trying to stay within rules. But it's all about approach, right? How is the approach of the customer? Can you trust them? Where's that character at? And how does that move into the relationship post-closing? Do you think you're going to have struggles there? And, we want to put good customers in the portfolio. There's a long life ahead of that loan and a lot of, resources that have to touch it.
I feel like some of the banks have broken some of the trust and in the past, and the borrowers have kind of created this. They're in this position where they feel like if they say the wrong thing, they're going to get denied for the loan, and so they aren't fully transparent, or they're more reserved with their responses and stuff like that. So in part, maybe in banks in the past, I don't really know, but if they've made the types of decisions that have created that, like, because like, where did that come from, right? Where did this come from where small business owners feel like they can't be fully transparent with you as a lender? It had to come from somewhere, I would assume, and that is creating part of the problem, because I would much prefer just pure transparency, because I could, like you said, I could work with that.
Yeah, I don't know where that stems from. I mean, I think that's a great question. I think, there was a period of time where it was really tough to get financing, and so it's possible that started this kind of feeling of maybe I need to hold some of my secrets closer to me instead of spilling them out the first time you meet with a banker. And maybe the thought of, well, if and when they discover it, we'll deal with it then. And, with that theory, I'm sure a lot of borrowers have gotten away with some stuff. It depends on processes and different things that you pull, if you might or may not find something. So,
yeah.
It can happen. And, as a banker, we just have to do our best with the information we have and, try to check all of our boxes. And sometimes we make good decisions and sometimes we don't. It happens. That's numbers game, right? So, you just try to create, in our experience, it's creating that relationship with the customer. We actually do a lot of relationship lending, because our customers, we're creating a good experience and they're coming back, for more. And so that's really exciting. versus some other shops I've really been at are really, heavily transactional. So excited
Right.
to be able to have that relationship with the customer, and I think it's creating a better experience overall in our portfolio.
I would agree with that. I've been at more transactional shops, and yeah, these people are just coming off from the streets, and I don't know them. You don't meet them in person most of the time. I'm on Zoom with them. It is just it's a totally different world.
It is.
So you were credit manager, credit director. Did you have like signing authority, like approval authority when you were in those types of roles?
Yeah, I've had various levels of approval authority, both within real estate secured versus non-real estate secured type of transactions. So that's kind of changed over the years and depending on where I'm at. But yeah, even at underwriting manager level, I had some authority. Also had some teams that were remote, so for quite a while I've really been managing the remote aspect and trying to make sure the teams are adhering and staying together even though we're very far apart.
Oh, and I want to talk to you about that in a bit, but I just want to talk about this authority, this because I've never had it, nor do I want it.
Sure.
But is it not, if a deal goes bad that you signed off on, does that impact you personally any sort of way, like you're just feelings wise, like, oh, how did I miss something, or do you have to go back and do an autopsy and say, what did I miss here? Like, how does that work?
Yeah, when a deal's starting to go south, we take a hard look at it. I want to know what we might have missed, and sometimes there might have been flags that we thought, oh, it's okay, or again, benefit of the doubt. Sometimes there's no flags at all, and things happen. Especially COVID coming out, some businesses did well and some just did not. So it can be very much luck of the draw at times. But we do start to evaluate what could we have done differently. What just did we make the right decision with the information we had at the time? And everything is hindsight, and so easy to say after the fact that, oh yeah, that all those flags were there, and maybe I shouldn't have said yes to the deal. But very much different, when you're not able to look backwards and see how it performed. Yeah. So it's you win. You hopefully win most of them, and some of them, again, can go bad, and we try to learn from them. I mean, I always take even a good situation that we're in and try to learn from that. And my team, we talk a lot about communication, and even when we do it right, how could we do it better? And so learning from each instance is really important, and I think that's one of the ways that we can only become better as in our own profession or personally as well.
Yeah, we should be looking at the ones we had to really hold our nose on and approve, but then they performed really well, and we should look at those too and be like, maybe I was looking at this wrong.
Yeah,
maybe there was something there.
Yeah, there's both sides.
You got to look at it both ways. But listen, I want to ask you this, because keeping in mind the training, right, the 5 C's of credit, the data, why do shops then start to say like, oh, I had a deal go bad in this industry, so now I don't want to do deals in that industry anymore? Isn't that the opposite of training and credit training? It's like you're taking your personal experiences now, mm-hmm. and based on a limited scope of you and the 100 deals you've done, and now you're just going to change your lending parameters based on, we had this deal go bad. Does that make any sense?
It does, and I've heard that, many a times, and I think each deal needs to stand on its own merit. You have to be able to look at each deal on its own, and so having a bad experience with another loan in that industry, I don't like to hold that new borrower hostage, if you will. There could have been a lot of things that are different, even though it might be the same industry and you might be able to liken several things. There's still a lot of things that are different, and a lot of things can happen with a loan. So for me, I try not to hold any of that, against the new borrower, and really look at each deal on its own. but I do still hear that, and so trying to navigate through some of those comments from time to time, try to just move on and try to prove, why this deal has its own merits and what is the strengths of it and what are those weaknesses and how do we mitigate that. All those things are really important. We don't want to just focus on the strengths, but we have to figure out what those weaknesses are and make sure that that business can overcome it too.
You mentioned a couple times the post-closing that you're still dealing with the borrower, which is true. And, it's an important point that doesn't get brought up often enough. What potential challenges do you encounter when you're dealing with a customer post-close that you might be referencing when you bring that up?
Oh, well, some customers don't pay timely, and so you're month after month, contacting them, you're 5 days past due or you're 10 days past due. And so it just depends on, how those customers interact, chasing them for that or trying to get financials from a customer. I mean, sometimes, they're coming to us and asking us for a servicing action and still trying to get, the items that you need are just as challenging as they are, in origination, ironically enough, right? Even though they need something from you and it's usually very time sensitive, there's still, a list of things that we need to be able to analyze it and look at each borrower, look at the request, be able to justify whatever it is that it may be that they're asking for. So, trying to get what we need from customers is still a struggle.
Has anyone come to you that's been having some struggle? And this might be a sensitive area, so maybe you want to keep it more general or broad, but is anyone asking you for forgiveness?
Well, I think there, again, are some borrowers that did really well during the pandemic, others that got by, and then, there are some that have struggled a lot. And we use every tool in our toolbox to help those customers, especially when they come to us and they're asking for help. We want to help them. So we have different things we can do, like deferments, extending maturity dates, and those things can really help, a payment and help.
Well, I get all that, but like, did the mentality shift? I use the word forgiveness for a reason. The free money that was issued.
Okay.
Did it change the mentality of the borrower thinking, I don't really have to pay this back, do I?
No, you know what? I have not seen that. I have not seen, like, where's my handout here too, or that free money concept. So that is something that I've not really seen any borrowers do since forgiveness.
Okay. All right, just curious. All right, let's switch it up here, okay? So I want to go back to what you had said earlier, because you have managed teams, remote teams. Let's start with just hiring someone. How do you hire an underwriter that's going to be working in their, home office? We don't even have like a home office of underwriters where they can go for a week and train. Everyone's remote. So walk me through how this is all working.
Yeah, so I mean, it's different than it used to be. You bring somebody into the office and you get to meet them, or a couple people get to meet them, and you get to see them face to face, and that's just totally different these days. So it's several interviews. Usually, we'll do one or two with a couple, one or two people. Usually I'm looking at if I like them, then I'm going to pass them on to somebody else, and I like for different perspectives. And so we usually have people from our team meet them. I usually have people outside of our team meet with them as well, and we do that in kind of a group setting. Try to keep the group setting down. I don't want to bombard somebody with 10 people or anything, but 2 or 3 people, and we might do 2 or 3 different interviews like that to try and get different perspectives and feedback and the most amount of time that we can with somebody to see if we think they're going to work. And that the variety of perspective is very important, and I love for my team's feedback, especially when we're hiring somebody in a certain stage. It's great to know that that the other team members approve of that or are excited for somebody like that to come on. So I try to involve the team. From there, let's say we are going to go through with it. It's we have a great IT team, and they're trying to get everybody all the right equipment. is a challenge, and get it to them, prior to start date, and make sure that they have all the support they need to get everything set up. I mean, we're bankers, we're not IT people.
Yeah. Oh, and logistics too. Like, yeah.
Yeah, just little things you might not think of if you weren't really heavily using a home office before. Part of it is knowing that first week is a lot of setup and making sure that everything you have is working, making sure access is right, and it takes a little bit of extra time because you might have to call in to IT a few different times to get everything situated. So it's a little bit of flexibility in that manner. And then it's just a lot of Teams. We use Teams and a lot of communicating like this so that we can see each other. There's a lot of interaction. I mean, because actually my team and I are all completely separate, we use Teams all the time, every day, all day. Multiple conversations are going on, and it's a great way for us to be able to really know what each other is doing. It's a great transparency tool, so BDOs understand what's being worked on, and it just gives us a lot of that connection that you miss, not being in the same office physically.
I just want to say shout out to the IT people in the SBA industry. They should name that weekend that when they got PPP and then everyone had to work that weekend to kind of figure out what the heck they were doing. Or no, actually, I'm sorry. The weekend when everyone decided we're going remote, right? That's the weekend when IT had to work and figure out how to convert, in-person teams remote. But anyway, shout out IT.
Definitely. Without them, it was much harder. So yes.
So you can find people, you can interview them on Zoom, you can onboard them. But how do you actually get them as part of the team? How do you build a culture on Teams and Zoom? I don't know if you have that answer because it seems like a big question right now, but what's your take on it?
That's the key, right? The golden question. And I think that comes with a little bit of time and everybody just connecting and building trust. Trust isn't built overnight, and SBA loans take longer to close, and so that length of time can be a lot longer, and so it can be 3 months before we start closing a new BDO's loans, and so that trust has to be built, and it takes a lot of time. But that's just one scenario. I think it really though is trust throughout the team, constantly being able to communicate with each other and knowing that we're there for each other is really important. It's not easy, and there's no easy button for it. And if it's not a two-way street, it's going to be difficult, right? Like, I can only reach out so much, but if it's not reciprocated or that person's really not happy or successful, that can be a challenge as well, because it's not for everybody. It sounds great and glorious to work from your home office, but in reality, it's not for everybody. So and you got to find the right people that fit that mold, that have that sense of urgency, that have that drive, that want to go get it all done and get their job done. And it's important to find that type of quality. We use humble, hungry, smart a lot as characteristics that we're looking for, and those are three. That you want to be humble about it, but you've got to be hungry. And so those are really important things that have to, really fit the team dynamics.
I like that. Have you had anyone quiet quit? Have you heard of this?
Oh yeah, I would definitely. I've read all the articles on it. I think there's some new coins now out for part of that. I don't know that I've had anybody myself quiet quit.
All right, just curious.
I don't think so.
All right, we can move on from that then. So we talked earlier. You have a really deep credit background. I know you have the closing background, but before you came here, is it true you were the credit director at another bank?
I was, yes. I managed all of the back office. Correct.
And so the role you're in now is the head of SBA lending. did you change the name to FFB, or is it still Fresno First Bank?
I know we did recently change to FFB. That was a long time in the works, despite the timing being a little off with a few things happening in the same week. But we've been looking to reposition the bank. We're definitely not just based in the community, and so we wanted a name that was going to give us some more footprint.
That's a big move, right? I mean, you're head of SBA and government guaranteed lending at a bank. Now you're overseeing all operations, sales, servicing, all of that. Was this your first time managing salespeople and BDOs? And if so, what's that like?
It was. So I had, previously originated some loans over my career, but never was I strictly a BDO. And, but stepping into this role, it was very natural for me. I mean, I spent a lot of time with the salespeople in my career. And so that piece of it was not uncomfortable for me at all. And I like going on calls with them. I mean, they don't always call me in on deals, but when they do, I feel like we knock it out of the park and we do a great job, and they're really excited that I came on the call. So I enjoy the time that I have with them, and I think we've built a great sales team, and we're continuing to grow that. It's really important. But yeah, finding the right people to fit that bill. It's still that hungry, humble, smart, right? And we want good people. We want great producers, and we want people that are really going to create team cohesiveness. It's tough when you're growing a team, and so you add personalities to the team, and you want to make sure they all work together well, and so that's something I look at very carefully.
What does that role look like? I mean, it seems like you would have your hand in a lot of different things in that role: sales, credit, portfolio management. Like, what does a day look like for you?
Oh, yeah, I'm pulled in a lot of directions because, yes, there's closing and underwriting and servicing and sales. Luckily, I have been able to put some managers in place that help me manage that. So we do have a sales manager that, is helping with the salespeople. I have a servicing manager that helps over there in the servicing side of things. So I've been adding some really great people to the team to help me manage at a higher level. But yeah, I get pulled in a lot of directions because, the funnel gets small at one point, right? And so we want to make sure that we're making good decisions. I mean, I try to give a lot of leeway to my staff, and I want them to be able to take care of things on their own. But, there's just, SBA loans are tough, right? And so there's just oftentimes little quirky things that we have to talk about and work through. Make sure we're still meeting SOP policy. Make sure we did not think of something. And sometimes it just takes that talking back and forth to really get through it and understand that we're going down the right path. So I try to be available for the team as much as I can. I spend 90% of my day on phone calls in teams, just trying to reach out, talk to people, make sure they have the resources that they need. When we're onboarding new people, I spend more time training, showing our loan origination system, talking about how we look at spreading, until they become more independent. But my days get pretty crazy and filled up with lots of meetings because my life is meetings and we're all remote. How else am I going to reach out to my people and to my team? So yeah, it's a busy day.
Would you originate SBA loans in that role or no?
No. I mean, I do bring in some loans. You're talking about me personally?
Yeah.
Yeah. I mean, I brought in a few loans over the years, and while I've been here, I don't underwrite them or any of that.
You hand them off to the
I would
the
hand them off to
BDOs?
somebody else, and I'd probably have my chief credit officer approve them if I brought them in. So there's a few of that going on, and I have some old broker relationships that I still carry with me, and so if I can help them out, I definitely will. And we recently started a small loan program that we're really working on heavily right now. I know that's a big SBA initiative, and so we took that to heart and really created an efficient, streamlined platform with some streamlined underwriting to help really move those deals through faster and get money to the smallest of businesses. So that's kind of been a big focus of ours, and that's, I think been really good. We're really close to really marketing that heavy, so that's coming in the near future. But those are exciting initiatives and new products that, well, not new, but just products that we're really focused on and I think are community driven.
I like that. And the SBAs, honestly, they're doing a lot to make it make a lot more sense for us to be doing those. And we'll see what happens with the new SOP, but because small loans, I don't even know at this point, are they 350 or 500? I think it's a little bit of both these days, but seems like it's moving towards 500
That'd be nice.
based on the guarantee fee. So the borrowers are, not having a fee for up to 500, so it's making sense for them. And lenders, I think, can charge more interest rate on some of the smaller loans now. So it's starting to make sense. And there's different technology and ways of automating some things, which I wanted to briefly talk to you about. Are you guys, do you guys have an LOS? Are you looking at getting one? Like, where are you at on the whole technology front?
Yeah, we implemented one at the beginning of last year, and so we've been using that platform to digitally onboard our customers. So it's been a good platform. There's a big learning curve, but I think we've mastered it pretty well, and we've got some super users on our team that have really helped us create better efficiencies as we move those loans through the process. So we are very focused on technology, our whole bank, because we are a one branch bank. It's not ever our intention to have branches all over the place. And so we know to reach our customers, we need to do so digitally. And technology is just a huge part of our operating objectives every year. We have all kinds of different projects that we're working on to continue to grow that and create a better experience for our customers.
I think that's a great place to leave it. Amber Dorland, you've done it all. Credit, director, Nagel instructor. Thank you so much for stopping by.
Thank you. It's been great. So thanks for having me.
Absolutely. All right, that's it for this week. Don't forget to subscribe to the podcast so you never miss an episode of The Art of SBA Lending. And if you have any feedback or suggestions, email me at ray@artofsba.com. Until next time, ta-ta.